Often you'll see new investors asking, what is the secret to becoming a good investor? And this goes for lots of different professions. So today I'm going to show you 3 of my most influential secrets that I use in my stock market investing portfolio. How's it going, guys? Ryan here, and today I'm sharing with you some of my most influential secrets for long-term investors in order to improve your investing game and to make you more profitable when choosing stocks. But before we get into that, if you have not done already, please subscribe to my channel. It helps me out so much and you get to keep up to date with all the content I release as it comes out. And please always remember to like the video. It helps me out so much, guys. If you've got any comments, queries or questions about the video, please just leave them down in the comments section below and I'll endeavor to answer those questions. So without further ado, let's get into the video. And as I mentioned before, we're talking about stock market secrets specifically for long-term investors. And this is something you often hear new investors or people who aren't even really involved in the stock market ask about. What is the secret to becoming a good investor? And while there's no exact recipe, there are a few influential factors or secrets that people use through experience and understanding, and they use those secrets in order to make more appropriate stock picks and make more appropriate decisions when they are investing. So the first secret that I'll share with you guys is don't water the weeds, water the flowers. So you may have heard this saying before, and effectively if you apply it to the stock market sense, what you're effectively saying is don't put money into your bad stocks. Put money into those stocks which are doing well for you. So you often see people are losing money on stocks, the stock price is dropping, and as a result they pump more and more money into those stocks in order to average down, in order to A, collect more shares, but B, in hopes that when the stock does go up, or if it does go up at all, that the increase will be a lot more significant and a lot quicker. So effectively what they're doing is they're pumping in money into a stock which is not doing well. And obviously stocks have their ups and downs. Even stocks which are uptrending, they'll fluctuate up and down. But what we're talking about here is stocks which aren't going to go up in the long term anytime in the near future. So effectively what we're saying is stop putting money in stocks that aren't going to generate you the money back. You're effectively throwing money away and increasing the loss that you're already incurring. As you've probably heard me talk about in other videos before, cut your losses quickly. Don't be feeding these. Instead, what you want to do is feed your profits into your stocks which are performing. Inject your capital into those stocks which are making you money and continue to make you money, because this is where the money is. And while that seems logical, what you often see is a lot of investors make, let's say 10, 20 grand on a stock, they'll sell it all and they'll pump that money into the losing stock. That is the worst thing you can do, because effectively you've just thrown away all those profits and potentially some further capital on top of that as well. So please make sure you avoid that mistake entirely. Now, my next secret is if you're not willing to hold a stock for a few years, then don't even bother holding it at all. Unless obviously you're a day trader, but in this circumstance, we are talking about long-term investments. If you're going into something long-term, make sure you're willing to hold onto it for a long period of time. Now, there's a few things you need to consider. Obviously, A, what is your financial position? You want to make sure that you can inject your money into this stock and leave it in there long term, because effectively your strategy is long-term investing, which effectively means you put your money in there, you let it sit. That's all it does. You don't want to be in and out, in and out, in and out, because you are at a risk of losing money in those dips. And if you need to pull out the capital, you might have to pull that money out in a dip. And effectively then you've lost money, which is not a good thing to do. Secondly, consider the fundamentals of a company. This is the most important thing to consider when you are buying a stock. And that's due to the fact that if the fundamentals aren't solid, if the fundamentals change for the worse, then why would you get into that stock or put more money into that stock? Effectively, it's going back to the principle I just talked about before. You're watering the weeds. You don't want to do that. You want to be watering the flowers. The stocks which are generating you profits, the stocks which may be small at the moment, but will grow to become great big companies and potentially even generate dividends. This is absolutely crucial. Never invest in companies which you can only see a short shelf life. One thing you'll often see is lots of managers and directors jumping from company to company to company, and you'll see the path of destruction that these sorts of people leave. These are things you want to consider when you're looking at that. If you're jumping in a stock where you know someone who is notorious for absolutely pumping and dumping, doing dodgy things, etc., don't get into it. That's a fundamental issue that you need to avoid, because once again, you're throwing away money. Pump your money into the stocks which you are in long term and which you're not going to touch, which you have the patience and the control of your own impulse to not do anything to it. You just need to let it sit. You need to let it ride. You need to trust yourself, trust your strategy, and make sure that you're thinking logically about that strategy when you're putting it together, so that effectively you can put your money in these stocks and let them sit, let them grow. That is what you want to do. Now, secret number 3, and this secret is one of my personal favorites, and it's something that people don't really talk about. And this secret is effectively that if you are unsure about your stock, or you are having to justify why you bought this stock to other people or other investors, then you probably hold a bad stock. You should not have to justify your investments even to yourself, because your investments should be justifying themselves on your behalf. You should be able to look at a stock and go, wow, that looks awesome, as opposed to going, oh, this isn't good, but that is a bad sign. Effectively, it doesn't matter what it is, but if the fundamentals aren't there, they're not solid, if something's changed, make sure you don't make silly decisions like, once again, watering the weeds, or, once again, pumping money into it. That is the worst thing you can do, and once again, you're losing money. So these 3 secrets, effectively, if you combine them together, they are going to be strong and net you a very, very healthy portfolio if you follow them carefully. Now, it's obviously not always the case that all your stocks are going to go up. Even stocks which have absolutely everything going for them will not necessarily go how you expect. But if you apply these 3 general principles to them, then you've got a higher likelihood of having a successful investment portfolio in the long term. And you've got to remember, what you're effectively trying to achieve here is you're going to slowly build up your portfolio over time. So at the start, you may only hold 1, 2, or 3 stocks, but then 5 years down the track, your portfolio may be comprised of 10 plus stocks, for instance. And effectively what you're trying to achieve is all those 3 things that I've listed now. You want to be putting money and watering the flowers. You want to be willing to hold these stocks long term and not worry about the fluctuations in the price. And the stock should be doing the talking for you. You should not feel anxious. You should not have to justify your investments. They should be consistently kicking goals and progressing forward. These are key factors in creating a strong and healthy portfolio for long-term investing. Now, these rules won't necessarily apply if you're day trading, because day traders are in there for a quick buck. They don't really care about the long-term sort of future, and these rules wouldn't apply. So please don't get this misconstrued with day trading. If you're day trading, you're in, you're out, you're there for a reason. You're looking at a very, very small period of time. But in this situation, we're looking long term. We're looking at those stocks which we want to see grow, which we want to see start generating profits, making money, providing back to the shareholders in the form of dividends and similar sort of things. We want to see those real value stocks grow. So I hope you enjoyed the video, guys. If you did, please remember to give me a like. Helps me out so much, and subscribe for more content. Let me know down in the comments section below, what are some of your secrets that you guys use when you're choosing your long-term investment stocks? Or what do you use in general when you're picking stocks? If it's short-term, long-term, medium-term, whatever, what are some of your key secrets that you use? And with that, guys, I hope you have an awesome day. See you next time. Cheers.